Good morning, everyone. Thank you for joining. We presented today the Q3 number. So what I propose is that I'm going to comment a little bit on the growth, the profit, and what's ahead of us a little bit. The revenue development you have seen, we have slightly negative on-brand growth. So I'm moving to page 3 on why is that. We had a couple of factors which were an accelerated decline in the UK, mostly in supermarket, linked to the fact of the previous loss of listing, which take to the full effect, and specifically on Q3, a lower promotional support from the trade. We did suffer, which is unusual for us, but of the hot summer on tea specifically and hot drinks. And as we are getting traction with tea and hot drinks, that affected slightly more than we thought the business. Bonterre, who is a brand in organic shops in France, has decelerated due to the impact of the channel and, let's say, a one-off and short-term impact of restructuring that we are doing. But on the other side, Bjorg, our main brand in supermarket, improved its performance in Q3 versus the Q2, and will do so as well in Q4. And we have good to excellent result on high-flying brands like Isola Bio, Tartex, Ecosesta, and Alos. So moving to page 4, that leaves us with a growth of 0.9% year to date. When we look into the profit delivery, so we confirm quite a strong operating result because we have now close to on 9 months 9.2%. So that's very good. And on this quarter on 10%, I'm going to get you why. So if I move to page 6, on the 9 months, what explains the good operating results is we have managed to have a good control of our gross margin. So that's a structural program that we have put in place, what I call upgrading operation for years, which means that we are doing more and more of better mixed product under our 6 core categories, and we are pursuing value engineering project, and we are productivity project as well in the factory or in the external purchase. So despite, let's say, a nice push from a good friend in the grocery retail where we had a slight deflation, we have managed to have our gross margin ahead of prior year. That's the year to date. Year to date, our marketing investments are slightly ahead of previous years, and the SG&A are impacted by a good cost control program that we have put in place, as well as a lower variable pay. In Q3 specifically, you will find the same drivers, and to be said that in the full year 2018, my A&P was phased anyway more to H1 than H2. If I move to page 7, just to tell you that on Bjorg, who is our main brand operating in France supermarket, we have a better growth in Q3 than we have in Q2, and in a market which is booming and exploded with little things here and there, we are growing our market share on the key categories. They are dairy alternatives, breakfast cereal, veggie meal, and rice cakes basically. So that's the Q3 and a good implementation of the innovation that you see there. Specifically for Q4, we continue with good innovation launches on nutritional biscuits, for instance, or meals, and as well we have quite a strong promotional program where the objective is to get Bjorg very visible in stores in Q4. So that should be driving. That's a fundamental element for us to drive growth in the fourth quarter. Now, a specific look at Germany, page 8. Germany, if you remember, we engaged 2 years ago into a restructuring and a big push in supermarket. That push is continuously delivering slightly above our own expectation on the back of better distribution, but as well from good innovation. Good innovation as well that we leverage in the organic shops. And in organic shops, we have managed to get traction in this channel, which is not a high growth channel, but this is now slightly growing. Last part, page 9. We acquired Abbott Kinney. Abbott Kinney, of course, is small today and is important tomorrow. Why is that? Because we have dairy alternative is our first category, and we have leveraged that reasonably well across Europe. And the next thing in dairy alternative is the vegetal yogurt. So with Abbott Kinney, we have a fantastic brand, and we have planned to roll it out quickly next year. Then we move to page 10. Ronald, you want a guide for expectation?
Yeah, good morning, everybody. I think, on this page, the only real change from the previous guidance we've given is that, we now expect low to moderate growth. I think you can all understand that given the Q3 top line results, the 2 to 4% and trying to get to the bottom end of that range, let's say, would require 5 to 6% growth in quarter 4. I think we have strong plans in place, and we can talk about it a little bit later to drive growth and return to growth in the fourth quarter. But I think we also want to be a little bit cautious, and that may mean that actually the growth may end up a little bit below that 2%, so the bottom end of that range, which is why we felt we just want to be transparent and have slightly changed the guidance on that and our expectations for the full year. On all the other points, we remain with the guidance that we presented with the half-year results. So I think that concludes our brief presentation, which hopefully you all had time to read beforehand, as it was uploaded at 7 in the morning. So maybe we can open the floor for questions.
Ladies and gentlemen, we will start the question and answer session now. If you have a question or remark, please press star 1. The first question is from Mr. Karel Zoete, Kepler Cheuvreux. Your line is open. Please go ahead.
Yes, good morning. Thanks for taking my questions. I actually have 3 questions. The first one is on the impact of the warm weather on your tea business. Would it be able to quantify a little bit what the impact has been? The second question is on Björk. You highlight the third quarter was better than the second quarter, but did you also highlight you expect a further pickup in the fourth quarter? Just to clarify that. And then lastly, with regards to gross margin and mix, it's been an area of focus for you for some time. The progress we see now in the third quarter, do you expect this to continue in the coming quarters? Thank you.
Hi, Karel. The impact of the warm weather, so we are not in the situation where we are in just because there was sun during summer, so that's not what we say, just because we are trying to narrow, and it's difficult for us, that our forecast, and tea specifically is a high growth category and an important category for us. It has an impact. Ronald, you want to give, we did some assessment on that. You want to comment on that point specifically?
Yeah, I think as Christophe said, it's not the only impact, of course, and you can look at this in a number of ways through various lenses, but if you look at just the business development from a category perspective, then just about half of the total decline, is what we see in our own brands in the tea category.
Clear. Thanks.
And so on Björk, Karel, yes, we are reasonably not comfortable, but we are very aggressive in Q4. So we have good reasons to have put plan in place and regain, let's say, some good position with the trade to deploy more innovation and quite a strong promotional plan in Q4. Which gave us serious hope that we will have a good quarter on Björk, and much better than Q3 and Q2.
All right.
And I've seen that by customer, by month. And so far we are on track with our estimate on Bjorg.
All right, very clear. Thank you.
And on the, you had a question on the gross margin and the mix. Overall, yes. So we do expect that this gross margin is not artificial at all. It's the result of the mix evolution that we have had over the years, where we cut low revenue and improve and in-source the good one. It's an impact of we are trying to do more things from our core categories and bundling existing volume, which are better SKUs. So that even if we have less growth than we plan, we are not hit from a low volume as a total for Wessanen. And so yes, with that mix improvement, the structural mix improvement and the productivity effect that we have done should be there until the end of the year.
All right, thank you.
The next question is from Mr. Alan van den Berg, KBC. Your line is open.
Yes, good morning, gentlemen. Thanks for having my questions. I also have 3 questions. The first one is on the corrective measures that you have put in place or will put in place for the upcoming future. If you could provide a bit more details on that. I think that you already hinted on some actions for Bjorg, but I was wondering if you could detail a bit more what's in the plan. Then on the guidance, you seem to indicate that the gross margin evolution is structural, but also that you are looking more and more aggressively at SG&A reductions. Therefore, I was wondering if given where your EBIT margin stands today, I was wondering if your guidance for the full year is not a bit conservative. So I would like to have your thoughts on that one. And then maybe a last question on the guidance. You guide for own brand growth, low to moderate. But what about the total autonomous growth? Do you think that can be positive also in the fourth quarter? Thank you.
Maybe I'll have the first one, and Ronald will do the next one. So, as you have seen, we have a growth rate that we don't like, and that has caused lower growth than previous year. So yes, we have put in place corrective measures. Some are in place now, and some will continue in the future. And they are made of a focus, making sure that the growth engine and a nice part of the profit engine of the company, which is Bjorg, is doing well. That's the short term innovation, good activation in store. That's happening Q3 and Q4, but mostly will be happening in Q4. We are accelerating. We have high growth brands in the portfolio, and we continue to do so. So Germany grocery, Spain grocery are doing very well, and more. And innovation will be a key driver. So the corrective measure that we have in hand, we are putting in place a program to continue to deploy our key categories in organic shops, so that if the channel is not delivering me growth, I put in place a program for, to be honest, at the end of the year and next year to gain share there. Okay, so the corrective measure we have put in place relates to we make sure that we support the brand our key growth items. To be honest, that's the short-term one, and on the rest, of course, we are careful on the cost side. Ronald, you want to guide? You want to guide on guidance?
Guide on guidance, yeah. So in terms of the gross margin, I think, Alan, good morning. Yeah, so I think Christophe already sort of elaborated a little bit on that. There's a number of elements there, mix, which I think will continue to be favorable as we drive down the relevance of private label and some sole agencies in the portfolio. You know, and we are also actively looking at value engineering, optimization of, you know, on the one hand, cost in our own factory. That's ongoing work that we do, and further sort of negotiation with suppliers of our product. and some of that may partially be offset by investments in promotions, of course. But overall, I think with everything that we're doing, we're seeing an increase in gross margins. In terms of SG&A, I think given the let's say slower or disappointing revenue development, of course, we've started to sort of cut our cloth accordingly and are looking at all elements of SG&A and make sure that we continue to invest in the things where we have to invest, but that we spend our money, let's say, extra wisely, and that's something that going forward we will continue to do, of course. On terms of the other brands, so if you look at private label already in the beginning of the year, we said that due to the restructuring that took place in Germany and last year and cutting off some of the private label in our Italian business, the first half we saw the biggest decline there, and if you then look for the fourth quarter, we're still expecting a small decline, but that would be more mid-single digits. I would expect might be a bit more, might be a bit less, but that's about the impact on the total. So that 50% of the business would decline by another, let's say, 5 to 10%.
Okay, thank you.
The next question is from Mr. Fernand de Boer, Grove Petercam. Your line is open. Mr. de Boer, your line is open. You can ask your question.
Yes, good morning. It's Wessanen Q3 from the Grove Petercam. Thank you for taking my questions. Firstly, on France, you are mentioning you're going to be quite aggressive in your promotions. So what should that mean for 4Q margins? That's one question. The second one, I'm actually worried about your remark on having no support from the trade in the UK in the third quarter. What does that mean going forward? Do you have to step up your own efforts here to get this business back on track? And the last question is actually on your net debt, actually a strong rise compared to the end of the second quarter, which means a lot of working capital outflow in my view. So what is causing that working capital outflow?
Thanks, Fernand. So the first question is on yes, there will be more promotion in France. This promotion has been budgeted, forecasted, so we don't expect something we don't know on margin. So that's very clear. Secondly, on the UK, where are we in the UK? We have a business which is a little 100 million, which is where we have two fundamental things. One, we have, let's say, an economic context which is not very nice, dated back from the start of the Brexit, due to because it forces us to put prices up. We have a bit of delisting, that's one, and we can do better internally. So we have put in place and lately a new team, and we will, yes, it's a step-up effort that we are taking and we will be doing, and we should deliver next year. On the net debt, Ronald, do you want to have a comment?
Yeah, I think also in relation to the UK, Fernand, to give you a little bit of color there, we're also changing, as Christophe already said, the commercial setup, whereby, we're changing the way we go to the trade. In some of the early examples we're seeing is that with better use of our, shopper insights, we've actually convinced one or two retailers to have another look at sort of the way they look, for instance, at the tea category. And I think, as Christophe said, with putting that new team in place, that will start to drive improvements there. It won't happen overnight, but I think, having seen some of those things we're putting in place there, that gives me certainly a bit more confidence. In terms of net debt development in quarter three, there are basically two main drivers. One is, of course, the payment for the acquisition of Abbott and Kinney. And secondly, the reduction in the creditor balance, because if you look at inventory and debtors, they're basically in line. The creditors reduction and therefore, that's an outflow of working capital is basically driven by, on the one hand, some phasing of payments, and on the other hand, we see that our investments or our capex creditors are coming down as basically some of the investments in Italy and particularly new tea machines in Bedminster, they're now coming online. So basically, that reduces the capex creditors that are part of the working capital. So those are basically the two big drivers. On the one hand, the acquisition for Abbott and Kinney. On the other hand, the reduction in creditors.
Okay, thank you. Maybe one other question. I think in the previous call, you give a little bit guidance, let's say, on the margin improvement for next year to see you back on the 50 basis points. That still stands, or are you going to be more cautious as the market is simply more difficult? Because also in the health food channel, I think sales are down or not that great everywhere. In Spain, I think you don't mention how it's going there. In France, you are under pressure. So could you say a little bit on your margin expectation for next year?
Do you want me to take that? So I think, look, Fernand, we're still in the middle of developing our plans for next year, and I think you can understand that given sort of the more recent past, we're taking sort of a cautious view there. On the one hand, trying to balance the investments that we need to make behind our brands, and on the other hand, trying to be frugal where we have to be. So it's still early days, but it's also too early to say anything there at the moment. I think just need to have a look at that.
Okay, thank you very much.
The next question is from Mr. Reg Watson, ING. Your line is open.
Morning, gents. You highlight the fact that Bjork growth was up in Q3 versus Q2. What were the growth figures for Bjork in Q2 and Q3, please?
Good morning. No, we won't indicate the growth in detail in Q2 and Q3.
Okay. Can you tell us by how much it improved in Q3 over Q2 if you won't give us the absolute?
It improved nearly, the rate was nearly twice,
okay.
But from a low base, okay? And it's going to be better in Q4.
Yes, no, I understand that. Certainly, as Ronald highlighted, you need to do, close to 5 to 6% autonomous. Just coming back to Fernand's questions on the EBT margin for Q4, if you're going to make your guidance for the year, as in flat year on year, you probably can afford to do 6% EBT in Q4. Given the heavy investment you have behind the brands in Q4 to deliver that kind of top-line growth, is it reasonable to take Q4 as a proxy for next year, as in if you want to deliver typically 5 to 6% top line, you're going to have to accept a 6% EBT margin?
No, but Ronald, you're wrong. So, but Ronald, you want to comment on that?
Yeah, I think, Reg, that is an extremely aggressive view that you are taking. And as I said just earlier, we are in the process of developing our plans for next year, and also looking a little bit further out, giving the sort of more, let's say, volatile and different dynamics in the market, and we will invest where we have to invest. But I think, if you're indicating that the 6-7%.
Yeah.
Sorry?
Are you saying I'm wrong about the 6%, or are you saying I'm wrong that 6% is the new world order in order to deliver the top line?
Yeah, I don't see us dropping down for the full year 2019 to a 6% EBIT margin, Reg.
Okay, but am I correct mechanistically that the Q4 18 is going to be in that ballpark? If that, triangulating your guidance for the full year, we know what the 9 months is already. So mechanistically, if you're going to be at the same EBT margin for 18 versus 17, which is your guidance, then you deliver 6% basically in Q4.
Yeah, look, I think we've guided for at least in line with 2017. I don't know who said it on the call earlier. that somebody said, that might be a little bit prudent. Of course, in the business our size, quarter by quarter, the actual spend on A&P does have an impact, as does the growth. I think we've also indicated that we expect to return to growth for Q4. What level of growth exactly that will be, we'll see. And of course, depending on what that level of growth is, that will have an impact on the margin as well, because some of that, given the size and the structure of the P&L, will drop down or not. So that range, and you've seen this from following us for a longer period now. The volatility the ranges of EBIT margin quarter by quarter, given how the spend.
You can call it volatility because it is.
Huh?
You can call it volatility because it is volatile.
No.
But I think the point I'm trying to make here is that it's quite clear that you have adopted a commercial strategy for Q4 in order to deliver this 5 to 6% top line growth. That is costing you margin, because otherwise your margin guidance wouldn't be, we expect EBIT percent of the revenue the same as the prior year. So, it's quite clear that in order to drive the top line, you're having to invest, and therefore...
Reginald, you are inducing that we're going to do 5 to 6% margin. It's I don't know where you get that, and it...
From your guidance, because we have...
all right, okay, but sorry. Look, we have a plan. If you have listened to me carefully, where my A&P, yes, I'm not sure, that the A&P are phased slightly more in H1 than H2.
Yes. So what I don't understand then is if the EBIT margin is actually quite strong in Q4, this then leads to one of the earlier questions, as Ronald pointed out, that actually your EBIT guidance is way too low for the year.
No, but I think, Reg, look, this is not an exact science in the sense that is it going to be 8.6, 8.7, 8.8, or 9.0, we just called it out volatility. So that there is a range there as well, like at the top line, and depending on how the top line pans out, what exactly in terms of promotions we get away. We've got the plan to support some of the innovation. The quarter four margin, has a range as well, and therefore that rolls into the full year number. And given the weight of Q4 in that full year number, if that is between 6 and 8%, for instance, let's not forget that this is a business with 130, 140 million turnover per quarter in own brands, and therefore. The P&L and how that drops down, there could be, a bigger swing at the bottom in terms of EBIT margin, which we've seen, in many quarters.
Okay, thanks. I'll give it a rest there, but thank you for your patience.
That's fine.
The next question is from Mr. Robert Vos, ABN AMRO. Your line is open.
Yes, hi, good morning. I have a couple of questions, and even more puzzled now about margins, but I'll get to that. Firstly, on A&P, you mentioned different phasing through the year as a reason for lower A&P in the quarter. I think Christophe said there's more in the first half than in the second half. Considering what you mentioned, the lack of promotional support from the trade in the UK and also the several other top-line issues you mentioned, particularly in France, it all sounds a bit counterintuitive. Considering the trend of growth deceleration already in a couple of quarters in a row, shouldn't you step up A&P no matter what? So that's my first question. Then moving back to the EBIT margin, I think your guidance is not at least 8.5%, but your guidance is at level of last year, which is 8.5%. So in my calculations, it means that you assume a stable EBIT margin in the fourth quarter of around 6.6%. Taking into account the comments you made on the phasing of A&P, why do you not expect implicitly then EBIT margin progression in the fourth quarter? And then a third question. You explained that listings that were previously lost impacted your third quarter revenues. How long will this impact continue? Can you remind us? And have you, in the meantime, also already regained some lost listings in the UK? Thank you.
Good morning, Robert-Jan. A&P, we are not pulling out the A&P, so we had revisited when we got, let's say, the results of our negotiation with the trade at the end of Q2. So we have revisited all the resource allocation and made sure that on the year to go, we have everything that we need to grow. So it was not about calling off the innovation, but on the contrary, making sure that they land well with the trade, and specifically as well on promotion, which gives us the visibility in the trade. So as you said, we have that first priority was to do that, frankly. So that's what we have been doing so far. Okay. I ask you on I answered the question on the listing in the UK and France, and I'll let Ronald come back to the guidance on EBIT. On the listing in UK and France, the impact that we have is mostly on this year. So when you deal in the UK or France, at the beginning of a year, they deploy the assortment slightly before mid-year, and you get impacted until the year end up to the mid of the first quarter. So that's the reality of it. That doesn't mean that we cannot do more. So typically in France, we are launching more range of Bjorg to offset that are landing in Q4. Okay, but structurally, the impact is on the full year up to early Q1 next year. Ronald, you want to say something?
Yeah, I think Robert-Jan, good morning. On the guidance for the EBIT margin, I think last year on a like-for-like basis we did 8.6% if you exclude the effect of currency, which is small anyway. So therefore, mathematically what you calculate is of course correct. And if we do a little bit better, you're talking about maybe 10, 20, 30 basis points above that. But as I said earlier when Reg asked the question, given the volatility and the uncertainty we're facing, we're being cautious. That's why the guidance is in line with. If the fourth quarter, returns to levels of growth that are slightly higher than perhaps we expecting, and on the cost side, things go a little bit better our way, and then yes, then maybe there might be some upside on that. But as I said before, the swings in the quarter that we are talking about are relatively small, but can of course have a big impact on the margin in the quarter, and therefore on the full year you're talking, as I said, maybe 10, 20 basis points.
Okay, yeah, I still don't understand, in combination with the wording on the phasing of A&P, why there's no implicit progression in the fourth quarter margin, which is already, if I'm correct, it was 6.6% last year in the fourth quarter, which is already low within the year. It's the lowest quarter for EBIT margin. So I'm still a bit puzzled about this. Maybe if I can squeeze in one other question, what is your view? I haven't heard anything on markets, but what is your view on market growth in general? Is that still, did you see any changes? Is it still some 5 to 7% per year on an annual basis? Can you elaborate a little bit on that?
We see a very different profile, which are made of, yes, we do recognize specifically in grocery 5 to 7% where we play overall in Europe, and we have low to no growth or slight decline in the organic shops. We have lived that in the past, and the organic shop probably need a couple of time to restructure themselves and to come to the next step, which has happened in the past. But for the moment, we operate with no growth in organic shop.
Okay, thank you.
The next question is from Mrs. Anna Patrice Berenberg. Your line is open.
Yes, good morning. Thank you for all the information already provided. And I was a bit late to the conference call. I apologize for that. Just a couple of questions again on the Q4 and on the growth of Bjorg. You said that you want to be quite aggressive on the promotional campaign. My understanding that you already too promotional in Q2, and that was actually negative pricing impact for Bjorg, and hence you had a good volume growth, but it was offset by negative pricing. So what are your expectations for Q4? How different the promotional activities will be? That's the first question. A second question, can you disclose that? I'm a bit confused. Is Björk growing or is it declining? Or is it growing in volumes and it's declining in revenue? So I'm a bit lost here, so if you can just provide a bit more explanation, it would be useful. And also on the organic decline of own brands in Q3, how much was it because of volume and how much it was because of pricing? And was it kind of more linked, the decline, was it more linked to the decline in the tea category and adjusted for that there was flattish or improving development? If you comment, it will be great. And then if you can disclose growth rates by regions, what is your growth in France and what is your growth in Germany and in Spain? And the last question for the time being on the M&A. I understand that you're also quite busy on putting all the plans to get back to growth of Björk in France. Do you still have also time and attention to spend on further M&A, or that's a bit less of the priority right now? Thank you.
Thank you, Anna. So I'll respond to most of that, and I'll let the volume and price to Ronald. No, the difference between when you articulate a promotion, if you are not careful, you cut your price to have access to promotion. But what matters is the effectiveness on the promotion in the fact that what visibility do you get in stores, okay? And in Q4, we are very well prepared, better than Q2, to get high visibilities in a couple of very significant trade partners in October and December. So that's in place. So for the same money you spend, you can get better visibility, specifically when you have now that the assortment have landed. We now have better planning of activation in store. Okay. So Björk, second question, is growing volume and value year to date and in Q2? Absolutely. Growth. So we don't. I mean, I understand the need for disclosure. So our business of organic food brands in France is growing. So Björk is growing, Clipper is growing, Alter is growing, Naturala is growing. What is hampering the growth in the French business is Gaylord Dozer, which is dietetic business, which is declining double digit. And in France, the organic shops brands, which had a very good start of the year, and we are impacted like many people in else by the stronger boost than planned that the supermarket. So as a counter effect. So that's how much we can say about that. We do have a good growth in Germany. Grocery is flying. We have a good growth in Spain. We have growing in Italy as well. And in the UK, as you see, we are lately declining out of the Q3. On the M&A, I mean, it has always been our top priority to do more with what we have, because we believe that we are always careful. So we believe that we have a portfolio of product. We need to make sure that we can get a good level of attention in the supply chain to create some value, typically in the situation we are facing today, and that help us to maintain our gross margin. So these are our top priorities. Grow the own brand that we have and make sure we continue to progressively upgrade and be more efficient in the supply chain part. Okay, that doesn't mean we don't look at M&A because with a market which is moving, there is a lot of consolidation that are happening. Okay, that doesn't mean that we should buy anything. So our top priority remains the growth of our business. One, the good cost control and efficiency in the supply chain and overall in the cost of, for the organization too. Still, we are looking at M&A. We have staffed ourselves accordingly a year ago, and we can land that and we are doing that in parallel in that priority order.
Good morning.
I'm not going to acquire a business before fixing my Björk business. To be clear. Sorry, Ronald.
No, no worries. Good morning, Anne Patrice. I think your question regarding price volume is related to Bjork, I think. I think Christophe already answered that. In terms of there was absolute volume and value growth in Bjork as a percentage, and also as we've already said, growth accelerated to sort of double the level of what we saw in Q2.
Okay, and maybe you can provide the bridge for the Q3, the EBIT bridge. How much margin expansion was down to the gross margin, and how much was to the SG&A, please?
Yeah, it was sort of balanced. Clearly, there was an SG&A benefit, which I think we called out in the presentation, related to both short-term and longer-term incentive plans that have had a benefit relative to the prior year. And of course, as I said, we put a cost control plan in place, basically reducing things like travel, not maybe spending on advisory where we don't really have to, etc. And then, as we talked about the gross margin benefit, and thirdly, as Christophe already explained, the phasing of A&P was predominantly in the first half as planned this year. So if you look at that, yeah, it's not quite evenly split. A&P had a significant impact, but both the gross margin and also the overheads were contributing without sort of going into the detail of the exact split there.
Well, would be fair to, because you had almost 160 basis points EBIT margin expansion in Q3, so would be fair to say that maybe 20 or 30 basis is the gross margin expansion, and that actually should continue despite possible promotional activities because of all the efficiencies, all the rationalization of SKUs, etc. So that's part.
Yeah, and also I think, as we said, the mix benefit from lower percentage of private label going forward, and within the mix, Bjork back to sort of better levels of growth. The tea business in Germany, as that continues to grow and make a bigger part of the business, particularly if the weather turns a bit colder again. So that's all. Those are also mix effects.
Okay, understood. And perfect. I'll let the floor to other people. Thank you.
Next question is from Mr. Fernand de Boer. Your line is open.
Yes, hello, it's Fernand de Boer. I have two actually follow-up. I'm still a little bit puzzled about the gross margin improvement, because on the first half, actually there was flat, and then suddenly these mix changes come through. So if I remember correctly, then I think you said on the second quarter that actually at Bjork you had 7% volume growth, but that was offset by around 2% price. So maybe could you say anything about this price then at the third quarter? Because I think I have the feeling that you did better on pricing. And that's one first question. Then the second one is, I think in the past you were kind of category captain for the organic food at Carrefour and also at Auchan. So are you still the category captain at those two chains? And if so, then I remain puzzled what happened in the second quarter when all those new listings came in and actually you lost their part of your position. Could you explain how that works?
Ronald, you want to start by the gross margin and I handle the second question?
Yeah, the gross margin, I think, given again the size of our business, that's a whole mix of elements that play from quarter to quarter. Sometimes in the factory gross margin plays a role into that. So, I think overall, if you look at the longer term, we're basically driving, as I've already said, the mix enrichment, value engineering, in recipes, some of the restructuring we've done in the past in a factory. So over the long term, that's all driving that up, Fernand, without sort of from one quarter to the next, there can be some volatility there, and then maybe we haven't commented on that. But I think, in this quarter it was up a bit strongly, and if you look year to date, those margins are up as well, which, again, for the reasons I think we've already discussed.
Okay, but you didn't have a better pricing in France than did you have in the second quarter?
No, not significantly better, no.
Okay, thank you.
And Fernand, yes, we do have we are, let's say, a category captain at the key customers. With the biggest one would be Carrefour and Leclerc, more than Auchan. That doesn't mean that they do exactly what we say every day. So they are pushing the very strong structurally the organic food. They are pushing our own shelf, Carrefour and Leclerc, what they call a pure player shelf, which is very nice for us. What they put in it after is the result of negotiation and the offer and demand of everyone. So there's no, and we are engaging them again now. As we speak, the team of category managers are going back, preparing the strategy of category for next year, and having a conversation with them. Myself, I had a discussion with the head of Carrefour Organic 3 weeks ago on what's the strategy for next year. Maybe the assortment was slightly too big on here and there, and how can we optimize that?
Okay, thank you.
The next question is from Mr. Karel Zoete, Kepler Cheuvreux. Your line is open.
Yes, thank you. Just two follow-on questions. The first one is in the introductory remarks you said there's a program to gain market share in HFS in the specialty channel in 2019. Can you talk a bit more on that? And the second question is just more clarification and stepping away from volatility on a quarterly basis in the margin. But what you're basically telling us is that you expect a margin of 8.5% or slightly more on the operating profit level this year on a turnover base of, say, more than 620 million euros. So that's, in the end, the guidance you have for the full year in terms of margin, right? Those were the two questions.
Hi, Karel. Yeah, I think on your last remark, I think that's correct.
And on the first one, let me give you some color. In the organic shops, we have put in place this year and continue to do so next year, range extension. Because I give you an example. Allos in Germany a year ago was suffering from the decline of the channel and a poor brand activation. What we have done now is to extend the Allos brand with the dairy alternative, which is of course the same recipe as we produce and which is a key winner. And now Allos is entering tea in organic shops. Meanwhile, Clipper in Germany is entering supermarket. So that's a good way to extend our range, showing the loyalty of our own brand, which is a strength of Wessanen, and making our trade partner benefiting from our core innovation and core range and the best runners, but with a specific HFS brand that they like. So that's the plan, and that's the plan we continue.
Okay, thank you. And then did you just say with Clipper tea you've now launched into supermarkets in Germany? Is that a Q4 thing or more?
No. We are continuously getting more and more listings at Clipper tea in Germany. So the traction we get initially in the drugstore, which is DM, which is a very good thing. Then we are having a conversation, and then with Edeka and Rewe, and this conversation are transforming with some of them progressively into actual listings.
Okay, thank you.
Ladies and gentlemen, for questions or remarks, you can still press star 1. There's another question from Mrs. Anna Patrice. Your line is open.
Yes, couple just follow-up questions. If you could share with us the size of the tea category, how important it is, the range in euro terms, The Dietic brand in France, also how big is it? And if there's any way you can stop the decline, or it's structural and you're just withdrawing slowly support? And then the last question on the private brands and third-party distribution brands. So you're saying that the end of the year it will be again kind of 5 to 10% decline. What are the expectations for 2019? What should we keep in mind? Are there any other distribution brands that you might withdraw, or are there any other private labels that you might stop producing because you shift the focus on your brands, or because you adjust the capacity utilization? So what would be the development in the near, short and mid-term? Thank you.
Anna, I didn't hear your second question.
Oh my God. So one was on the size of the tea category, how big it is. The second, how big was your Dietic brand? And if you can do something to reverse the decline, or if you are withdrawing support and it's a cash cow, but okay, it's declining. And third question was, what should we think about private brands and third-party distribution brands going forward? Are there any measures that we need to take into account that will lead to further decline of this segment next year?
I understand. So for next year, Ronald, you want to comment on because it's again about the profile of next year, which is not finished yet. So.
No, it's not finished, and I think, for this year, and Patricia, so year to date, you've seen that private label and sole agency, so let's say the category others, as was presented on slide 4, shows minus 9% decline. As I already said, for the fourth quarter, the level of decline will probably, between 5 and 10%, probably more towards the end of that the bottom end of that range. So for the total year, you're then looking at, a similar-ish, maybe a little bit lower full year decline. And for next year, we're in the middle of planning. I think on sole agency, which is the larger part of that other category, what we've experienced, from time to time, in negotiations, people sometimes say, look, we want to take these brands in-house, or we want to give it to somebody else. Thank you very much. And therefore, it's difficult to sort of really plan for that. And for private label, this year has been significantly impacted, of course, by Italy, and in the beginning of the year, of course, by the loss of private label as a result of the restructuring of the German factories. That I wouldn't see recurring. And then, again, from time to time, as these private label contracts come up for negotiation, we'll have to look at that on a case-by-case basis. I mean, we are sort of in the middle of preparing the plans for next year, but I don't see at the moment that same level of decline. But we'll update you on that with our guidance when we do the Q4 results. Then we'll have a better view on that as well.
Thank you. And the size of the tea category? And
so the dietetic brand, which is Gaylord Hazer, we've already said that, I think, in Q2. So that's the size of that is around 15 million, so 15 million, and declining at sort of, double digit again this quarter.
And the tea category?
The tea category is around, I think, between, it's around 10% of the total business.
And was declining probably also kind of mid-high single digits in Q3 because of the weather.
Yeah. No, we've seen a disappointing performance, which, as I said earlier, is a significant contributor to the performance in the quarter.
Thank you.
There's a last question from Mrs. Brunet, BlackRock. Your line is open.
Hi, this is Capucine from BlackRock. I'm just wondering, what is your strategy on UK listings that you've previously lost, especially in terms of listings and promotional support for Callow and Clipper? Thank you.
G is excuse me. Good morning, Capucine. Our strategy, the UK listing, is to have a much more aggressive and holistic approach next year. So today we are going mostly to the trade on a category by category basis, and not showing how Wessanen as a whole can be a strong partner for a sustainable brand in the trade, which is a need in the trade as well. Okay. And the first range review that we are doing with them are on the full assortment basis, and not only by category basis, where we can show them how there is consistency in what we do, how we represent ethics in foods, and so we can deviate slightly more the conversation than category by category and price by price. So that's our approach going forward.
At this moment, there are no further questions. Please
All right.
continue.
So I propose that we close the call then. I'd like to thank you for your participation. Thank you very much. Bye-bye.
Ladies and gentlemen, this concludes the conference call. You may now disconnect your line. Thank you for your participation and have a very nice day.